All right. This will be elaborated on in our financial instruments section. So again, I'll talk about it. We'll see it later. Just unrealized gains and losses on available for sale debt securities. This chart right here, super important to memorize later on for that section. If you want to memorize it here, I'm not going to dissuade you for sure. Memorize it if you want to right now. So this is for just debt securities. Generally, we've got three types of securities, and this is something important I worked on when I was an auditor as well. You want to make sure that a company's securities, if they're buying and selling stocks and bonds, are properly classified. We want to make sure that, okay, if they're planning on selling a stock or a bond soon, well, it's going to be trading. If they're holding a bond to maturity, held to maturity. And if it's somewhere in between, it's going to be available for sale. All right. How do you report these securities? Well, fair value for the first two, amortized cost for the last one. And to be honest, I'm not going to elaborate too much on it because just memorize it. Just memorize it. That's where your points will come. I'll elaborate on things that are important to know, but just remember these here. Net income, that's where you report unrealized gain and loss on trading, so that's why it's not included in OCI. Unrealized gain or loss for held to maturity, there is none because it's held to maturity. It's a bond. It pays out interest. And, well, that leaves available for sale. You're going to report that in our OCI. And then lastly, where do you report them on the statement of cash flows? Not as important, but it is here to know. Trading securities are usually in operating, and these two are more investing activities. They're more long-term securities. Unrealized holding gain and losses on available for sale debt securities are reported as components of OCI until the securities are sold, as well as unrealized holding gains and losses that result from a debt security being transferred into the available for sale category from held to maturity. So if we transfer between these categories, well, those unrealized holdings go from no recognition to OCI.